Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Tesla report for Tuesday, October 4th, 2022. Before I jump into the charts, I just want to encourage you to please click like each and every time you watch one of our Tesla videos. We'll be doing this all the way through the month of October on a day-to-day basis, and then November 1st, we will roll or switch to a different high-volume, high-day tradable stock. Investable stock, a popular name typically out of the top 10 of the NASDAQ 100. And subscribe if you haven't already to the Wicked Stocks YouTube channel, and please share the video content, the video itself, with friends and colleagues. Let's jump into the charts, show you that, sell signal, that goes without saying. Obviously, when we gapped clearly below the mid-260s support, this is an area that held late last week. With the production numbers coming out much lower with Tesla, a disappointment. We had sellers right out of the gates. We gapped considerably lower, and we slid into the low 240s. Now, one of the things I wanted to show you, and was showing you before, how the downside 5/8 Fibonacci, the May low against the August high, 5/8 back was 248.03. That is still there, but I'm opting for 249.07 now as our day resistance, a level that can contain daily buying pressures, and below which 231.49 is likely over the next day or two. 249.07 is nothing more than a simple trend line off the lows following the August pullback low and then the early September pullback low. And just a simple trend line off that. We settled below it on Monday. It's 249.07. I do like it because of its close correlation with that longer-term 5/8 Fibonacci at 248.03. It can contain daily buying pressures, and below which the 231.49 former trend line off these highs is likely over the next day or two. And by day, I mean possibly today, if we break or open below this simple, steeply descending channel bottom. We slipped below. That was the 242.06, as I recall it, for Monday. I forgot the number exactly. It's 238.10 today. So we can break below it. Certainly, we may even open below it. So if we break or open today below 238.10, you should expect 231.49, where we can place a weekly low. And from here, rally back to the 249.07 trend line within the week. But overall, you probably are well aware of the fact that we are anticipating much lower price activity. I want to look at the right chart to show you. And it really is, I can show you the daily chart. So the daily chart has now set up for 206.85. I was saying over the next month or two, given the present state of affairs, we might reach this by the end of next week, perhaps. If we close below 231.49 today, I think that that's in the cards. Closing below that 231.49 trend line I showed a moment ago, 206.85 in reach by the end of next week, where we can bottom out on a weekly basis, possibly double bottom into November trade. That is a real clear possibility. Just showing you that this is the ultimate target now. I'm assuming we'll close the week below that 264.34 area. I think it's highly likely. And if we do, I have a 2 to 3 month target well below at 188.72. So yes, a retest of those lows from last May expected over the next 5 to 8 weeks, possibly by the end of October. And over the next 2 to 3 months, 188.72, where we could, by that point in time, bottom out through the first quarter of next year, and then who knows from that point on. So we remain heavy, big picture, through October, below the mid-260s. That is our long-term resistance area. Let's talk upside, that if we do push or open above 249.07, 254.97 is in reach, and that is just below yesterday's high, which is the beginning of a significant gap. 254.97, by the way, if you can see my cursor, is this high here back in late July, and we fell off and then gapped back above it. It can contain intraday buying pressures if we happen to push or open above 249.07. But if we close today above 249.07, I think there's a decent chance that within 2 to 3 days, we should push back into the mid-260s, where once again, we can top out through October, and once again, below which that 206 area is anticipated over the next 5 to 8 weeks or sooner, and the 180s over the next several months. We do need to get back up and over 265.05, and if we do, we should then reach 292.42 within about 3 to 5 days. And honestly, if we close back above 265.05 in the coming days, I will begin looking at, once again, 330.90, this long-term channel top, as a end of October possibility. I suppose that it's certainly possible if over the next few days, this week, we close back above 265.05. That could be a sort of significant rebound rally, not just a rebound rally, but a significant rally into the 330.90 area if we were to close above 265.05. But until then, we remain on the defensive. The market remains on its heels through October, anticipating 231.49 within the week, the 206 area over the next 5 to 8 weeks, and the 180s over the next several months. And that is all I have for Tuesday's Daily Tesla Report. Please click like each and every time.